Hello and welcome to another episode of Test, Optimize, and Scale. I've been looking forward to sitting here and speaking with Gabriel Sadoun, Head of U.S. Business Development for Digishares on the real estate blockchain side of things today. Gabriel, thanks for joining us.
Thanks, Jason. Great to see you.
And Gabriel, we've had great conversations at conferences between our teams, big fans of Digishares and everything you guys are doing. Before getting into real estate blockchain, want to start with the why, want to start with your story, get into Digishares as a whole. What is your background? What brought you to the space?
Thank you. Absolutely. So I actually grew up in France and studied economics and finance, kind of typical business school student, and joined the investment banking industry after school. I was working in New York, raising capital for various alternative investment funds. And in that world, you're raising capital from family offices and institutions. And I was wondering, how come there isn't more participation from the average Joe? And there should be just tons of ways to automate and make the trading process more efficient in these markets, so that you could bring in more participants, and so that market wouldn't be captured by just the big guys. And so I kind of started to learn about smart contracts and blockchain and how that could enable democratization. So really was very motivated to join the industry. And I was lucky to stumble upon Digishares as they were looking for someone to help develop the business in the U.S. Because we're a Danish company, the founder is based in Denmark. And yeah, got really lucky and was able to join a year and a half ago now. It's been.
So your background, mergers and acquisitions, getting into portfolio management, then going down the road of real estate, and specifically real estate blockchain.
Yeah, exactly. So I in my investment banking team, we used to work mainly on capital raises for private equity funds, venture capital funds, real estate funds, but also on some mergers and acquisitions between fund managers. Very much into that private capital markets world. And then, that's where that really enabled me to see how archaic the processes were, because you're basically contacting people through a database that you have, and through emails and calls and organizing meetings. And then once investors invest, they're locked in for like 10 years into a fund, a lot of times, and the minimum ticket is like $5 million. And you have all these fees for intermediation and closing and all that. So I figured, this is, this maybe in the 50s, I'd understand like if something worked that way, but yeah, I really believe that technology could make the private markets just more liquid and more modern and more efficient, and that I think it's going to happen through blockchain technology.
And we work on investor marketing campaigns, a lot of private equity type of concepts, have worked in blockchain since 2017, real estate blockchain over the past few years, 2019, 2020. And I like talking about the contrasts. So for you, what are the biggest differences in real estate investments, blockchain real estate investments, and other types of early stage, I shouldn't say early stage, other types of blockchain investments as a whole?
Yes, so I wouldn't even see real estate tokens as a blockchain investment. I would see it as a real estate investment, which is enhanced through blockchain, and enhanced in a way that enables liquidity for investors and just more automation and just a more automated, sign up process, onboarding process, and then secondary sale process. So what's really happening, just to make it maybe a bit more clear, is you have a legal entity that's set up in, let's say, Wyoming or Delaware, which are the two states that are very blockchain friendly. That legal entity owns a building or multiple buildings, and what we're doing is tokenizing the shares of that legal entity. So it's, the real estate investment is the same as a non-tokenized one. You have to go through the same rules and regulations. Do the marketing as usual with guys like you. But then once you have that token instead of that traditional share, you can easily trade it, and you can, in the future, you'll be able to bring it to decentralized finance protocols and get all sorts of loans from it, and just have a lot more freedom with it than a traditional share.
So more liquidity, a simplified process with the real estate blockchain compared to a real estate investment, and not even looking at other types of tokens, meaning more of a layer 1, layer 2 blockchain token or something like that.
Right. So these are very different in the sense that they're securities. Compared to a layer 1 blockchain token like Ethereum, let's say, which is a cryptocurrency, these tokens, these security tokens, represent a real world asset. So you're getting ownership into a legal structure that owns a real world asset. So I think that's a key difference. And to kind of make the link between something like Ethereum and these real estate tokens, just so people understand, you use Ethereum to create your smart contract, to create the tokens. It's called minting. You mint the tokens off of a blockchain, a layer 1 blockchain like Ethereum, or a layer 2 blockchain like Polygon, and then that token represents ownership in a real world asset.
And what types of properties, what asset class of real estate are currently using this vehicle? Is this multifamily?
Yeah.
Is this commercial?
Yeah, that's a good question. We're seeing a lot of multifamily and commercial as opposed to single family. Although we do have clients that are building platforms where you can invest into single family homes, but there would need to be a lot of such homes on the platform for it to make sense to tokenize and to reach that scale. So if you're an asset owner or you want to tokenize, generally it should be a multifamily or commercial asset, because just tokenizing like your home or your 2 or 3 houses doesn't make sense yet on the individual level. In the future, you could probably imagine a world where people can tokenize their homes and then bring those tokens to like a decentralized lending system, so to kind of circumvent banks. But I don't see that happening just yet. So right now, for sure, it's the larger assets. So multifamily developments, hotels, industrial assets, things like that.
And how many investors are participating in a single project for it to fill?
Yeah, so that really depends. But just to maybe to give an example of the democratization potential of this. So there's one asset for which you have quite a track record. It was the first asset to to be tokenized in North America and then listed on an exchange, and it's called the St. Regis Aspen Resort. And the token is called Aspen Coin, and it's listed on an exchange called T0. They started off with tokenizing the equity portion, which was owned by, I think, 9 limited partners, right? You know, like semi-institutional, institutional, or accredited limited partners. And so that started trading maybe a couple years ago. And now, instead of those 9 LPs, you have, I think the latest number was 700 retail investors who bought the tokens from these LPs and who are now participating in the value creation of this project. And you know, that's, I think, something we're going to see a lot more. And the second asset that was ever listed, real estate asset that was ever listed on T0 was one of our clients' assets, which is called the Spot at Myra Park. It's a developer called Market Space Capital. And this started trading more recently, but there have been a few transactions. And so I think, like, in 5-10 years, most commercial assets of the sort will trade in a way where you know, you could have hundreds, even thousands or tens of thousands of owners of it. It wouldn't matter. Like, people could own you know, $10 worth of each building, and yeah, that'd be fine.
And I ask just to paint the picture, because
Yep.
if we're working on other types of, let's say, online capital raising, regulation CF, retail investors, very low minimums, we may see thousands of investors on a project. Yep. Same with Reg A+, depending on how many institutional groups are involved and how it all averages out. Or Reg D, more of Aspen Coin type of numbers with the amount of groups getting involved, and know that to be more common at the time. But as you mentioned, over 700 different individuals, what that's you know, looking like for these projects in the secondary market, and how that's continuing to grow from there. What do you think is required for these tools to be adopted by more groups in real estate, by more investors, by more sponsors, you know, sellers, buyers, however we want to look at it? What is going to be the next steps of mass adoption?
Yeah, that's the real question, right? So right now we're kind of in a chicken and egg situation where real estate developers, asset owners want to see secondary trading platforms with lots of investors, and investors to be interested in signing up to these exchanges want to see a lot of assets. And right now we're at the very beginning where there aren't a lot of assets and there aren't too many investors, and it's kind of a just a waiting game, you know, chicken and egg problem. So I think it'll come through through the asset side. I think just get the first few pioneering developers that want to tokenize their assets, and then once you reach a certain amount, investors will start to see, you know, that there are quite a few assets available, and then it'll just like snowball. I think kind of like you know, the 90s with email, we're kind of at that point where, you know, why would I buy a really expensive computer for emails if nobody I know has emails, right? But that you know, the network effect all gets going at some point. I think another there are some other aspects. There's wallet adoption, crypto wallet adoption. I think as soon as that becomes as common as a bank account, which it will for sure, that'll be huge. And for that to happen, you also need better crypto on and off ramp solutions. So the ability to convert fiat US dollars into something like USDC stablecoin very easily and at a very low cost. So once you have that, once you'll be able to log into your Bank of America account and convert dollars into USDC very, very easily. And that's going to happen, by the way, probably next year. I think the CEO of Circle said, and then transfer that super easily to a wallet that they were able to set up easily. I think that's kind of a big, you'll see big adoption once that happens.
Sure. Sure. And at that point or at a later stage, do you envision, let's say further enough down the timeline, all real estate to be bought and sold using this type of tech?
So I do think so, but I need to add more color to that because
Please.
the way we I mean, we work in the realm of securities, right? So that's investments, fractional investments. I think investments will happen through blockchain. Also because it's great for compliance. You can automate a whole bunch of things in the smart contract that kind of force the compliance. So that's one thing. But then there's the sale of homes between individuals, right? Like when you buy a house, and that's also being disrupted by blockchain. So you have companies that are like Propy, Propy. I encourage people to look at them as well. That have a system where all of the closing documents and kind of everything you need is centralized in this NFT. And when the NFT is traded between two individuals, then the ownership of the home switches hands. Right, and this wouldn't be a security, or at least that's my understanding, because it's just a owner to owner transaction, individual to individual. So and that's obviously a huge part of the real estate market, but that will happen as well, and you won't have these really long closing processes with papers everywhere and like a 5%, I don't know, just these huge intermediation fees. I think that's definitely gonna change as well.
Now, how are you guys simplifying the process at Digishares?
So we're simplifying the process on the security side of things. With smart contracts, as I was saying, you can code like into the token, so to speak, all of the compliance requirements that you need. So the KYC, the lockup periods, maximums in terms of how much you can invest or minimums, just things like that. So what we do is we enable the creation, the configuration of these tokens, these smart contracts, without the need for coding knowledge. You can just configure them directly in the platform. Then we facilitate the investor onboarding process. So investor can just come with their MetaMask wallet and go through KYC and e-signature, and then easily acquire the real estate tokens. Then we facilitate the management of a token holder base, where you can send out distributions, manage the cap table, things like that, and finally the trading. So we have a tool where people can enable internal trading through a bulletin board. It's a very basic swap tool. Just say how many tokens you want to sell at what price, and it appears on the list, and people that are within the project can see that and buy and sell. And we're a bridge to external exchanges, such as T0, but there are others popping up. And on there, it's like the experience is like a Coinbase for security tokens. So you're like it's like the equivalent of a Schwab or account, and you can trade ownership in buildings, real assets, very, very easily.
And as you mentioned, this ensures compliance, the speed and overall ease of the transaction, and then the secondary trading liquidity that it allows for. How long does it take to get something set up with Digishares? if there is an asset owner and they're looking to go down this path, perhaps they need to speak with you, speak with your team, learn more about the process. But from activation, what is that life cycle? What is that timeline to follow before they are up and offering tokens?
Yeah, so on the tech side, which is what we handle, it can be as little as 2-3 weeks, or up to a few months, depending on the level of readiness of the client, like with the front end website and domain names and a whole bunch of other things, like if they're developing an app or whatever. So that's on the tech side, but there are two other pillars. There's legal. So we have a network of legal partners that people can talk to, and that can, yeah, I'd say, can take from 3-4 weeks to, if people are doing a Reg A plus, it can be long, especially in STO Reg A plus. I've heard 6 to 9 months. But generally for Reg D, it should be around a month or a month and a half or something like that. So that's the second pillar, and the third, of course, is marketing. And guys like you handle that. And I don't think the tokenization aspect really changes the timeline, does it? I guess it's just the usual timeline that you guys have for clients.
Yeah. Yeah, I was going to ask about marketing. As a marketer, and could of course talk about our processes. But from what you've seen, what role does marketing play in this? Do the tokens somewhat sell themselves? Is it very similar to any real estate investment opportunity and going down many of those traditional channels, just directing them to the digital process and having the contracts, the KYC, everything living there? Or is it really more of a digital marketing play and bringing on investors who have participated in these type of deals in the past and seeing a digital funnel, a digital follow-up to a more mass audience?
Yeah, I think it can be various things. Ultimately, we work in a white label fashion, so the traffic would have to be directed towards the client's website, and then we integrate via API. We have like an Invest Now button, and that's where people would be prompted to sign up and invest. So you need to direct traffic towards the website. I think there's a misconception for some people that tokenization somehow, automatically enables you to find investors and raise capital, a lot more easily, automatically, without doing the digital marketing. So yeah, that's not true. Tokenization offers a very, very strong additional argument for investors, and that is the automations and the liquidity optionality, and just making the experience a lot more seamless, especially for cross-border transactions. So if you're having international investors come in, I mean, if everything is done on chain, it's just really seamless compared to the traditional system. So you have that as an additional argument to convince people to invest, but ultimately, it's the same. You still have to find these investors. It's the same kind of marketing process. So yeah.
Sure. And I speak with other marketers, other folks in the space in general about the differences from, as you were mentioning, let's say a layer 2 and L2 type cryptocurrency. A lot of retail investors in the space will refer to as an altcoin, or referring it to contrast of another Reg CF Reg A plus offering, let's say in the tech space. So tech startup, high risk, high return, investor could lose everything that they put into the deal. And then what it looks like to invest in real estate and traditional reflection of real estate and where it sits in the portfolio compared to a private equity deal. If it loses, maybe 20%, percentage loss occurs, but a lot more stable, a lot more chance towards success, and especially over time, what that means, and then being able to have the tokenized element, beyond everything for setup, but for liquidity and what that means for the investor, for their perspective, and being on these secondary markets like T0 and others, and how that could even give them a better upside over time potentially, and more rapid trading is what many analysts are projecting for the future as well too. So I know it's an exciting time for everyone being able to talk about this, where it's all going, and an area where, as you mentioned, it's more of real estate investors opening their portfolios up to tokens versus cryptocurrency investors hopping into real estate.
Exactly, and it's and you do have a lot of people that come and want to target cryptocurrency investors, but if they invest in the product, which is real estate, then they're no longer only cryptocurrency investors, right? So it's kind of it's I don't think it's I mean, it's a bit limiting just to want to target cryptocurrency investors, because like if your thesis is I want to invest in cryptocurrencies, like you're not going to invest in real estate tokens because that's they're not cryptocurrencies, right? So it's more about broadening access, and getting more people to invest in real estate via tokenization.
Now, how long did it take you guys to get to this point? How many different iterations, if I may ask, and for listeners tuning in, what are some things you guys had to test to get here? And what are some recommendations you have towards other founders listening in, and how they can test to be able to get things to a good point?
Absolutely. So there was a bit of iteration. So I mean, I joined the company a year and a half ago, but the company is more than 4 years old now. But the founder, Klaus Skoning, who's a Danish computer scientist, when he co-founded the company, the project was different at the start. So it was more about having a way for people to invest in startups in more of a closed environment, and then they kind of pivoted, and then it almost became a carbon credits project. But they saw, basically they were to structure that project, they were looking for a solution, to on the tech side, and they couldn't find any. So they decided to build a platform, and quickly realized that the actual opportunity here was to white label, and the largest market in the world is real estate. And so there was a lot of interest for real estate. And so from that point, there was a strategic shift towards focusing on real estate, really focusing the product development on real estate and the marketing as well. And on the product side, like once the company started to get going, I think one key thing for us was or is our relationship with our client Market Space Capital, which I mentioned previously. They're this real estate sponsor based in Houston, and they were really excited about this whole intersection between real estate and blockchain, and it had actually already started to think about it, but didn't know really what the ecosystem looked like at the time. This was, mid last year, beginning last year, and so we really worked together very closely and got a lot of feedback from them, and our teams are quite close on regular calls, and so throughout the year we've really made the product better step by step, just by getting feedback from MarketSpace, who are ultimately like the perfect tester, because they're a real estate sponsor developer. They're going to use the product, So if people could find, one great client that can become kind of a partner and help iterate and develop the product, I think that's worth gold. Yeah, it's really it's really helpful for the team.
That is an amazing recommendation, and one that I don't recall being brought up on the show specifically, maybe a while back, but we try to base everything off data. There are assumptions, and then there's actual analytics. Well, those analytics are on thousands of users, investors, buyers, what have you, or one large
Yeah.
strategic partner, but who is also the client. They're the end user. They are part of the marketplace. They are the developer, the sponsor, and you're asking them for real time feedback. You're
Hmm.
getting that closed loop system, and then
Yeah.
changing things up from there to be able to say, hey, this worked best, this did not. Here's how we improve both. Now
Hmm.
we're going with this option. What about optimizations as a whole? How do you guys approach those pivots, those changes to better what you're seeing, or try something different?
I think it's mostly based on client feedback, and obviously the client won't always come with the solution, but then it's kind of on us to find a solution. Um, and But yeah, I'd say client feedback is the most important.
And what has allowed you guys to really scale in the industry, or any tips, anything you've seen in terms of scale that listeners can adopt for their own models?
I think it's been helpful to really be focused on real estate, and so have like a more targeted focus. There are um, competitors or people in the industry that are more generalist, which is fine as well. I just think that with a targeted approach, we've been successful in creating a little niche. So so yeah, just focusing, like narrowing down the focus as much as possible on one thing and then trying to become the best at that thing. Um, that's been very helpful as well.
And where do you think the space is going as a whole? You've mentioned this is going to be the primary vehicle, wallets, on off ramps
Mhm.
through stable back currencies such as USDC, USDT are going to allow for far more investors to enter the market. With more investors, there's going to be more sponsors, developers on the other side of the marketplace. What does the space look like in 2025? What does it look like in 2030? What does it look like years out?
Just to give you maybe the end vision is, most people will have an app, whether it's called Coinbase or T0 or something else, on their phone. Um, they'll be able, in just a few uh, clicks, to um, purchase, $100 worth of a building in Japan if they wanted to. Then, if they choose their mind the next day, they can sell it, and they can have like 100 of these $100 investments around the world, and you'll hopefully, um, if regulation enables it, be able to, take tokens out of a certain, exchange environment, put it in, lock it into a smart contract, which can provide a loan to you. Then once you're done with that, you can take it out, bring it to another, maybe a decentralized exchange, and sell it to someone. Like it's just that, you know, radical freedom and ability um, to trade and kind of get decentralized financial services. I think that's the end game, and so hopefully, most real estate developers, sponsors, funds, asset owners will have like a Shopify for this kind of thing, and hopefully that Shopify will be us, or yeah. So I think that yeah, that interaction with a tokenization platform, the interaction with um, exchanges, whether centralized or decentralized, and with lending protocols. Um, I think that's what the field is gonna look like.
Especially with the asset-backed nature and the comfortability around real estate, the success record around real estate. I agree. It's a matter of when rather than if.
Mm, absolutely.
Excellent. Well, Gabriel, as we begin to wrap up here, first of all, I want to say really enjoying the discussion. What are some final thoughts that you want to emphasize before wrapping here, leave listeners with? And what is the best way for anyone tuning in who wants to learn more to get in touch with you, to get in touch with Digishares?
Yeah, absolutely. I think it's really important to have the right partners. Hopefully, people would choose us for the tech side, but then you on the marketing side and one of our legal partners on legal. I think it's really important to have those three pillars in place, and not just the tech side or just the tech and marketing. So then just to learn more, we have a great YouTube channel. So yeah, if you just search for Digishares, you'll find it. And to get in touch with me, my email is gs@digishares.io. You can add me on LinkedIn, Gabriel Sadoun. Yeah, and look forward to talking to you.
Excellent. Excellent. And definitely recommend listeners to get in touch there. Gabriel, thank you so much for hopping in, giving us a bit more of a glimpse on the real estate blockchain world, everything it's taken to get to this point, where things are at today, and where it's going from here.
Thanks a lot, Jason. It's been a pleasure.
Excellent. I want to thank everybody for tuning in as well. We will see you next time.